Good afternoon and welcome to everybody. We're thrilled to have you join us for our event this afternoon, which is going to be a conversation with Matt Walker, who is a graduate of NYU Law's class of 2007 and who is now the managing director at S2G Ventures. Before we get started, I wanted to just quickly tell you all a little bit about the NYU Law Venture Fund, and then we'll go ahead and start with our conversation. For those of you who do not know, the Venture Fund has been around for 3 years now at NYU Law, and our goal is to bring together our community of students and alumni all around venture investing and entrepreneurship. And we do that through events such as this, through a number of funding programs for students and for alumni as well. I want to highlight a few upcoming events that we have. Next Thursday, the 25th of March, we're thrilled to welcome Jason Finger, a JD MBA grad of 1999, who's going to be talking about launching a startup right after law school. More details are on the screen, or you can also find out information on our website. And then for students, open to all JDs and LLMs right now, we're hosting a business plan competition. There are some monetary awards, and we're looking for ideas in the themes that you can see on the screen here. So if you're a current student, I want to encourage you to participate in this as well. It will be a really fun and interesting exercise for you. So with that, I want to welcome Matt Walker. We're really thrilled to have Matt join us this afternoon. And Matt's going to be talking to us today about venture investing in sustainability. So with that, Matt, thank you so much for being here. Feel free to come on screen when you get a chance. Matt, I know you're going to be talking to us about our topic today, but I figured just as a conversation starter, it would be really helpful to hear more about your experience to getting to where you are. And, very curious to hear about your time at the law school and what steps led you to taking this role at S2G?
Great. Well, hello, everybody. It's great to be with all of you today. It's too bad this is virtual. I very much miss my time at NYU, and we could have done this in person. That would have been great. I'll just start with some of my background. So I went to Michigan for my undergrad, and I was a mechanical engineering major. I worked in a neuromechanics lab when I was in school, and I went to engineering school because I wanted to know how things worked. I didn't really have any, I should have, but I didn't really have any notions of what I would do after school. And doing some lab work, I really decided that I'm not an engineer. I don't want to do that for the rest of my life. I did spend some time doing some grant writing. And what I thought was interesting is, whoever was dictating what went into this grant, whoever was dictating who gave us our money and why, really dictated the work that we ended up doing for the next few months or the next year. And I just looked at that legal position as a way to a better place. And that actually led me to apply to law school. I applied to, I think I applied to 26 different schools or something. NYU was the best school that I applied to. And I was just thrilled to get into NYU. And it really was transformational for me. When I went, first of all, so I'm from Colorado originally, and as I said, I went to Michigan. This was I basically went to NYU. I got to New York for the first time when I moved into the Agostino Hall to start my time in law school, and so this was just it opened my mind to a bigger city. I think it broadened my horizons. I think obviously the engineering degree is a technical degree and was challenging in its own way, but the process of breaking down a problem and understanding how laws drive decisions and can drive solutions was something that I just thought was and I still do think is core to the work that I do every day, regardless of whether or not I'm working on a quote unquote legal function. So I really enjoyed my time in law school. I at the time, I wanted to. I'm class of 2007, and at the time, the hot thing to do was securities law, and the finance law practice. I joined a firm called Cadwalader after law school, and I was working in equity derivatives. So I think '07, '08. So I worked on, this is one of the larger CMBS focused firms in the country at the time. And so Bear Stearns and Lehman Brothers were large clients of ours. And I got kind of a front row seat to what happened in the financial crisis. I didn't have a lot of equity in my career, obviously, just coming out of school. But you're working with people on the other side of the table that, a lot of fortunes faded in a week or a month, certainly at Bear Stearns when that firm shut down. So I was a securities lawyer for a couple of years, but quickly realized that was not going to be the place for me as the crisis hit. And I think the approach to risk taking and the approach to financial derivatives changed, at least for that short-term period there. And after a couple of years, I then went to business school, because I just love being in school, in Chicago. And then at University of Chicago, that took me into investment banking, where I worked for a few years back in New York at a firm called Perella Weinberg Partners. I then moved back to Chicago for personal reasons, and got connected somewhat randomly to people that were setting up S2G Ventures, basically the office that was helping put the fund together. And so I started at S2G at inception, and the legal background came in handy. I think they were looking for somebody that had the legal back. Can you paper these deals? Can you do some of the legal diligence and the financial background to look at the financials and projections? And so I started working with the founding team kind of as a looky-loo. I just thought it was an interesting place to be. I didn't know much about venture investing at the time. But they needed somebody that had that. They spent a lot of time on an airplane, and they needed somebody that had that legal and financial background. This is in 2014. So over a period of months, I got to know the founding team, and I really fell in love with the thesis, which I'll go into in a minute, I guess, around sustainable systems-based investing in food and agriculture. And so that was about 7 years ago. I've been with the firm ever since. I'm currently a managing director on the team, and I manage, roughly a third of the deals that we have in our portfolio. And I guess that's what we're here to talk about today. Anthony, I don't know if it makes sense now are there any questions about my background, or maybe just go into the presentation?
Matt, thank you for sharing. That's great. Feel free to go in, and I should just share with those who are attending either via phone or otherwise. Folks can submit questions at any time using the Q&A feature, and so we want this to be a conversation. But feel free to go ahead, Matt.
Great. So I've got. Let me see if I can share my screen here. That screen. Do you see the S2G approach? Great. So just background on who we are at S2G Ventures. Fundamentally, this is a food and ag focused, principally food and ag focused, but now food, ag, and oceans focused venture capital firm. And we're a mission-based firm. And so what that means is we are investing in certain outcomes beyond solely financial outcomes. We have a view of the world, and our approach is aimed at realizing that view of the future and driving capital into the solutions that will create a healthier planet, something that is healthier for humans and healthier for the environment at a high level. This is a page showing some of the entrepreneurs in our, excuse me one second. some of the entrepreneurs in our fund, I just want to point out that this is a people-centric function working in venture capital. We invest in technologies, we invest in companies, but principally we're investing in people. Everything that we do is about our entrepreneurs. Most of my job is working with these people to get uphill. As you see, this is a few, so Tim Rothwell doesn't look happy there. I think he's maybe not happy about the photo, but certainly happy about the business. We work with these people to bring about their dreams. And this is relationship management, it's board governance, it's negotiation, but really, this function in venture capital, I work for these people. We invest in their companies, but they need us to bring more capital to the table. They need us to open up doors. They need us to leave them alone. Those are the things that I spend most of my time paying attention to. As you think about our thesis, part of what we're seeing in the market today is a changing approach to ESG. I don't really like the term ESG, but I mean, that's what the market uses, environmental, social, and governance driven investing. I think, traditionally or in the past, ESG was viewed as a constraint on investing. So I will invest in anything except, guns and cigarettes and the like. It's sort of a negative screen on investing. But we have a different approach, and I think increasingly the market does as well. And there are those companies that core to their thesis or core to their mission is something that improves human health, planet health, food access, climate action, and the like. And we see those drivers as potential enhancements as opposed to a restraint. And so if you invest in things that are better for humans, better for the planet, you may over time see that because the consumer is looking for those things as well, you end up in a strategically advantaged position. So we really look at sustainability. We look at ESG as a driver of value rather than a constraint. And that's kind of fundamental to everything we do. As I said, we do food and ag and oceans, but we've just started an oceans fund actually in the past year. So I'll focus this on the food and ag side of the business because that's where I spend my time. So we're a soil to shelf investor, and we do everything from kind of PowerPoint stage. You need startup seed stage capital. And then on the other end, we've invested in companies that have existed for 20 or 30 plus years. And maybe they need larger checks, and maybe they're kind of lazy incumbents that if we add some technology or some inflection, we can see a large pop. And so we, seed to growth is kind of the play on words. It's about soil to shelf investing across the supply chain, but it's also seed, venture, and growth stage investing. I think, as you think about systems investing, that is also something that's somewhat novel. Traditionally, you have generalist funds that will invest in, broadly across sectors. You have specialist funds. But we're really looking at the food and ag supply chain. So our specialty is that supply chain, but there's obviously a great amount of breadth there as you think about CPGs on one side and, soil amendments, soil health on the other side. So we've invested in, I think it's 56 active companies today in our portfolio spanning that supply chain. And we are networkers at our core. We're collaborators and connectors at our core. So you see the number there of 250 plus different partners we've worked with. Just an overview of what I like about this is, I think in food and ag in particular, we're investing in a lot of companies that are not based on the coasts and that are not, your Silicon Valley type startups. Which means, frankly, that means a lot of them are not as expensive to invest in, but it also means they don't always have as many partners and as much interest, and sometimes the talent pool can be limited as well. But we're really thinking holistically about how to drive change across the system, and some of that is doing work in Nebraska, not always just in Silicon Valley. Our thesis is consumer centric. You have a consumer that thinks about food as a health and wellness tool. And I imagine, I guess I don't know who's on the call, but a lot of this is preaching to the choir. But as younger people, I think care about or are more knowledgeable about a broader set of constituencies and consider more things when make an affirmative choice about a wider variety of parameters when they're making purchase decisions. But if you have a consumer that thinks about food as a health and wellness tool, and they care more about the quality and sourcing of ingredients that go into the foods they eat, and they're voting with their pocketbook around some of those themes. So organic is I guess the catch-all bucket that we can talk about. But if it's local, if it's free from what have you, if it's your approach to labor, your approach to DEI, and other things, those things I think in the past that were seen as not consumer facing are now seen as consumer facing. I mean, the example that everybody talks about is RX Bar. This was a company that took the nutrition label that used to be on the back of the bar, flipped it over to the front, among other things. But that was I think a $600 million takeout, and a very successful endeavor in a short period of time, because the consumer cares about those things. At the same time, you have an incumbent supply chain that is in part designed to efficiently produce calories, and it does that very well. It's a modern marvel. I mean, you can get a 99-cent cheeseburger, and you can feed masses of people with affordable calories. But what that system is set up to provide in terms of caloric intake and basic vitamin mineral needs is somewhat lacking and structurally not set up to provide and meet the needs of that new consumer for nutrition, authenticity, and that broader set, environmental health, animal health, human health. And so we see that friction between the new consumer's demand and the supply chain's ability to supply. That's where we find our investment opportunity. And we see that we see inflection across the supply chain. So we invest everything from, I guess there's another page here I can show this. Yeah, here we are. Everything from ag inputs, on-farm technologies, upstream agriculture, investing in the farmer, and then to supply chain logistics, traceability and transparency, ingredients, packaging, shelf life, and then obviously as you get to the consumer, brands. We're in some CPGs. We're in a couple fast casual restaurant concepts, even some in-home kitchen technology. So we really invest across that chain, always looking for things that make the food system healthier for humans, healthier for the environment, at a high level. I don't believe this is actually fully updated, but this is a look at our portfolio. I think what is probably, I would imagine most of you do not know most of the names on this, unless you have a very keen, well, maybe if you're on this web, you have a keen interest in food and agriculture. There are a few kind of consumer facing ideas and concepts in the portfolio. I'll give a shout out to Beyond Meat. Was actually our first investment, which was transformational for us as a fund, and I think is in validating some of the inflection that we see in parts of our thesis. And as I said, we're a collaborator, and so if you look at this, there are a lot of different groups that are interested in this space or are impacted by this space, and our job is to work with them and figure out where the ball is rolling. If we can find the supply and demand signals up and downstream, and for potential suppliers and customers, it can make us smarter investors. It can provide insights to our entrepreneurs. Maybe it can provide purchase orders to our entrepreneurs. Maybe it can provide term sheets for those companies. And so we spend a lot of time being networkers and conveners to help move the system in that forward direction. I guess I just said that. And this is just sort of zooming out as you think about ESG and food and ag investing. When we started, this was, I think, much more niche. I think it still is considered niche, but I think ESG and investing in food and ag has just seen a lot more interest over the past 7 years. And you see this kind of 4x growth. I think it's probably significantly larger than that. today, but massive expansion of the number of dollars that are going into the space. And obviously, you see a lot of consumers that care about sustainability. They care about provenance, and that's driving change in the supply chain. I think at its highest level, the consumer has changed. Supply chains haven't, or they aren't as nimble and resilient. I think we saw a lot of that during COVID. Let's see. One of the things that's interesting here is, I think we're seeing this across the board, the public markets are starting to take notice. I think if you look at App Harvest, if you look at Laird Hamilton Superfood, if you look at, even Beyond Meat, there's a supply-demand imbalance in the public markets for companies that are new food, companies that have ESG at their core and not as a bolt-on. And I think you've got a lot of public market investors that have held out that some sort of allocation for sustainability, for ESG, for carbon solutions, and the public market incumbent companies, they just don't check that box. And so there's a lot of demand for these type of innovations in this space. And we're seeing kind of a rush to get into the public markets and kind of be the first to tell that story and get those allocations from public market investors. And I think that's something that's exciting and very stressful, I have to say. One of the things I to note here is, this is tough tech. We're dealing with physical things by and large. We have some digital technologies in the portfolio, but by and large, these are physical things. If you think about investing in agriculture, in broadacre row crop agriculture, a season is a year. So your iteration cycle can be once per year. It's not like the information technologies where you can iterate on an instant basis. And so that means you have to provide enough capital to survive potentially for a longer period of time before you're going to get that value inflection that makes you think, okay, I've made the right bet here. And yes, this company is going to be worth something more in another year. So it just takes time to build these businesses. But, and the other thing is, a lot of the innovation that we've seen is at its earlier stages. And you don't necessarily have growth stage or public market experience from the people that are investing in food and ag. That are driving some of these innovations in food and ag. And so there's work to be done to continue to build up the ecosystem, and that means we're always looking for talent in the space. And it's a very talented space as it is, but it just doesn't suck up as much as the air as a lot of the traditionally more, I guess, sexy venture-backed sectors. So that's work that we're always doing as a part of our networking initiatives as well. Actually, I got a better page than this. We sort of talked about the systems approach already, but thinking about the second and third order impacts and drivers of a healthy and humane planet. We've talked about millennials and kind of their changing views and purchase behavior in the market, how that affects supply chain. And also, we're investing in the technologies that can cause those supply chain adaptations at a high level. I've kind of gone through that. I guess I'll leave you, this is one more point to make. As you think about systems investing and the way that we invest from soil to shelf, there's a circularity here and a need to participate across the supply chain in order to bring out the change that we'd like to see. It all starts from the consumer. So if you think about the consumer that wants plant-based, for instance, and maybe they want plant-based for perceived dietary benefits. Maybe they want plant-based because of their view of what's happening in the environment, and carbon emissions. Maybe they want plant-based because of their view of treatment of animals. So you have companies like Beyond Meat and Ripple. And you have even animal-based producers like Farmer Focus that are innovating in the space, either driving better environmental outcomes, better nutrition outcomes, and the like. And so they need product, and they need feed, and they need inputs that go into the product that they make. And so you go back to the farm, and Clear Frontier is an example of a company that is, tackling this solution in the soil. And so they're saying, okay, well, I need a greater quantity of organic feed inputs, or I need to grow on a particular spec because the Farmer Focus brand is claiming a particular spec that relates to nutrition and the quality of their birds. And so I have to grow that specific product, and it's not being grown at scale in the market. So the Farmland Fund has to go back and think about those inputs. And they say, well, all right, I need high fidelity genetics because I believe that they will produce superior yield and superior nutritional attributes, or I need Terra Mera because I need to make sure that I'm not killing beneficials in the soil, and I need a better approach to pest control management. And so we invest in that space as well. And those companies, in order to evangelize the benefits of their product and prove that they either produce yield enhancements or value or quality enhancements, they need those data solutions. So we're invested in companies like Arable, Centera, Trace Genomics that can basically use digital solutions to enhance the quality of pest control, enhance the quality of seeds, but also calculate the benefit associated with those enhancements. And then with those benefits calculated, maybe we can provide more financing to the farmer so that they can now purchase more of those inputs. And so we're invested in companies like Growers Edge that provide warranties, insurance, and the like, and they can fund back to the farm to buy these new technologies and the like. And then, of course, these companies need to look at supply and demand trends. They need to price all of these products. And so we're invested in companies like Mercaris that are helping buyers and sellers understand the demand for higher quality inputs and related supply and related pricing. So there's a circularity there, and we see that supporting one supports the broader ecosystem. That's what we're trying to build. I think that's what a lot of investors in the space are looking at when they think about systems-based investing, and hopefully you generate a flywheel there as a theory of change for accelerating improvements in human and environmental health. One other thing is to think about is we're a venture fund, but we work with a lot of other adjacent, I'd say, capital providers to bring about change in the system. And I think increasingly, you think about the later stage things on private and public equity side, but also concessionary capital. And I think it's not just traditional philanthropy, but working with universities, working with grants, working with DAFs, for people who understand that, okay, I'm not necessarily going to get the return today, but I have to seed these innovations in the market. And those are some of our best partners in helping get certain things off the ground. Obviously, you work with NGOs, policy, and industry because messaging is important and regulations are obviously very important. And then, I think we've talked a little bit about kind of theory of change and talent in the space as well, but it's really an ecosystem that we are trying to be a part of and trying to grow and scale. So that's what we do. I'm happy to answer questions about it. I don't know if people think it's interesting. I can go into more on thesis. We can go into some, I can talk about companies in the portfolio. We could talk about, functional aspects of my job and the like. But I guess I'll pause there for questions from Anthony or others.
Matt, this is great. Thank you. And again, just want to encourage folks to feel free to submit questions in Q&A. I'll start with one that's a bit more biographical, Matt. Tommy says, food and ag investing seems like a very dramatic shift from what you were doing at Cadwalader. How did you get interested in this space, and how did you develop the industry background?
Randomly, I have to say. You know what I will say? When I was, I just didn't have the sensibility. I'll just be perfectly honest with you. When I went to engineering school, really, I didn't know what you would do with it. And I went to Michigan, and I thought that meant, okay, you're going to be in automotive engineering or something like that. A lot of my friends did that. A lot of my friends stayed in Michigan. I wanted to do something different. And I, going to law school, I sort of saw some people that seemed to be, doing well, and their world was a bit bigger in my mind at the time. And again, I didn't have the sensibility. Now I know some people that, did the engineering route and have phenomenal careers, and I think it's possible, of course. So this is just me as a child, really. But going to law school, I was very interested in finance. I mean, this is 07, 08. Like, I just thought, people are making money. People are really doing all of this creative thinking. And I did derivatives because I was an engineer. I did math in undergrad, and derivatives law was a lot of math. And it was more math than it was law, frankly. I mean, I spent my time on the phone with people at Bear Stearns, and let's see, HSBC, and a couple of other firms, really. And you were kind of working out trades. You were saying, well, what's the upside risk? What's the downside risk here? So there was part of that was understanding how people look at investments and allocating risk, and how you might take what one might feel is an outsized risk, and how you might hedge that risk, or how that outsized risk fits within a larger portfolio. So that is somewhat similar, but that's not how I got to where I am. So I did that for a couple of years, and the walls were coming down when I was working there, and it was really interesting. I think I saw, and maybe this is just me, but you go sit at a table and you're negotiating something. You think about the people at other sides of the table and what their role is, and is what they're doing interesting. And it was sort of back with the grant writing in undergrad. And I think when I was thinking about business law, and when I was working at Cadwalader, I saw these hot shots that were making these deals, and it was all about, that's a creative thing that they made. I was very curious about that function. And I will say again, this was me as a junior. I mean, I think being a junior lawyer is very different than being a partner at a top law firm. And that's a relationship management, entrepreneurial role, much more so than the role that I was in. And I loved my time at Cadwalader, I have to say. It's just that the walls were coming down in 2009. And when I went to business school, it was, again, being on that other side of the table. And working in banking just gave me that foundation in finance, in accounting, and just deal making, papering other people's deals. And then, candidly, I moved. Banking was a grueling job, and I worked at Perella Weinberg, and which was is a great firm, and I built some great relationships there. And I just talked to some people about it. I said, I kind of want to move back to Chicago. I was in a relationship. I was in a long distance relationship at the time, and moved back to just, let's get some more balance in my life. And the people at Perella were very supportive of that, and they connected me to the people that were helping to set up randomly, not for venture, but randomly. Just you should network with these people, and the function. So I just met the group, that was involved in putting together the fund somewhat randomly. And I just like it. I like the role. But what I will say is I remember thinking about, how do I align my skills and my networks to get into a certain position? And I can't tell you that I'm good at that, or that was something that I ever figured out. What was important was flexibility, meeting people, having conversations, and keeping my eyes open. And the other thing I thought in my life that has been helpful is changing things, trying new things. This is I was talking, I forget who I was telling this. I've been at this firm for 7 years. This is the longest I have been affiliated with anything ever. including like, you had elementary school and then you had this is it, and so I was accustomed to, I would go into a door thinking about how I'm going to get out. And you get used to that when you're in college and then you're in law school, you're thinking about what's next. And that's sort of how my mind was wired. And I will say functionally, the law degree is key in every, I've had a few jobs, but it's always key. I think a lot of people, first of all, they will grant that you know what you're talking about. People are afraid of legal documents. They're afraid of legal issues. And fluency there and just comfort there is critical. I would not have this job. I don't believe that I would have been offered this job if I didn't have that background. But I will tell you, I hadn't looked at a term sheet for a venture deal before I met this team. But I was, within like a week, I was like the guy because people just don't want to pay attention. The best people in venture, though, can do it from top to bottom. You can analyze a market, you can find a deal, you can build the network, and you can negotiate your deal, and you can be on a board, and that's really the goal. But I will say a lot of people that that don't come from law, they end up having to get there. But yeah, I think the law simply provided a leg up. And I guess the fact remains that I have to say, it was somewhat random for me to get here. I hope that answers the question.
It does, Matt. And I mean, you and I have talked offline about this, right? I couldn't agree more. I firmly believe, and you're a perfect example of this point, which is, a background in law can be incredibly useful in venture investing. A bunch of questions here. I want to ask you another one, and this is more along the times of when you started at S2G. What stage was S2G at when you were first introduced to the team there? And what were the challenges and opportunities of joining a venture fund at that stage?
It wasn't really a thing. It was funny. I showed up in a suit. I was from banking, and I showed up to a loading dock, and we worked out of a loading dock for like a year. And I'm in Chicago and in the West Loop, and it's like an industrial area. It's like meat packing was in like the 90s or the aughts or something, not the 90s, but it's like so it wasn't like it was an office, but like I remember, there was like construction everywhere, and it was, Sanjeev was still in Singapore. I mean, I met Sanjeev on the phone. Sanjeev's the CIO. He was still living in Singapore. And so when we started, it was at inception, and there were no processes in place, but so it gave us a lot of time to sit there and think. And we would spend, we put together, I don't think we have time for it here, but we put together like a couple 100-page, thesis presentation, just thinking about how did this system evolve? Why are we where we are? A lot of people want to vilify, some of the negative externalities, but they were there for a reason. It may have been a good reason at the beginning. And so we sort of looked at all of that, and we spent time just calling people, just trying to get smart. We like to say, other people say this too, but, if we're the smartest person in the room, we're in the wrong room. It's not our job. Our job is to find the smartest people and make sure they're in the room when we need to make critical decisions. And so we spent a lot of time building that out. It was helpful to have the law degree there as well. I mean, we had to come up with investment committee memos. We had to do legal docs. The first time somebody sends you a doc, you're like, oh, okay. And you got to kind of work through it. But just that comfort and the ability to move forward, I think is critical. And we have a lot more structure in place now, but it was kind of just a wide open space when I'm fortunate. It was a bit of a leap of faith, but I think so far, knock on wood, everybody, it's going okay.
Great. Matt, Glenn asks, when you mention impact investing, what involvement are you having with diverse business owners? As you and I know, all too often impact investors can be talking to the same old boy network. So how is S2G different?
It's a good question. I would say not enough. I think the reality is we are set up to provide, to push for soil health, to push for more resilient supply chains, and to push for things that are basically ag centric. And I think, I think the past year has caused a lot of people to pay more attention. But this is something that we try to monitor and track. What does the diversity among our leadership teams look like? I assume that's what you're talking about is how diverse are our leadership teams? How diverse is our pipeline of investments? And that's where I think is I think the most lacking in the space is making sure that everybody says, okay, well, we want we understand the value of diversity and of diversity of thought and diversity of backgrounds, and this is a broad system-based view that we're taking. But you find a lot of people saying, okay, but give me somebody that went to NYU Law, or give me somebody that went to Harvard, and give me somebody that looks a certain way that they are used to seeing. And I think obviously that leads to a lot of the same people getting the same types of opportunities. And that is something that we struggle with. We very much want to be a leader in that space. And it's something that, I think we can do better with. If I'm just being perfectly honest with you, I think the industry obviously can do better, but we can do better as well. And it's something we're paying attention to. We sort of make this this is a bit internal, but we have processes in place in a committee to do some of the work to think about this and how can we expand our pipeline? How can we make sure that we are sourcing and driving a diverse talent pool into our businesses? So we're minority investors. Minority meaning we do not have control investments in any of our, we have one control investment, but generally we are, we're coalition building. And so we don't have direct authority to say yay or nay with respect to specific hires or specific decisions. Really, sometimes you can have negative or effective deal control by having negative controls by owning a certain block, but we own a less than majority block, basically in all cases. And one of the things that we talk about, and a lot of our syndicates talk about, is board membership and sourcing diverse talent in board roles. And I think a lot of that, frankly, a lot of the diversity initiatives that people see are gender-based, more so than based on other aspects of diversity, because I think, frankly, a lot of people think the bar is lower, or not the bar is lower. They think there's potentially a more easily sourced candidate pool, or a pool that still sort of looks like the same pool that people were sourcing from in the past. And I think one of the things that we're pushing for is to think more broadly about where we find talent and about what it means to be a value additive contributor to a team. Because I think a lot of times people look at kind of the same boxes to check, and that is a driver of the problem. But we have a lot of work to do there, in all honesty.
Thank you, Matt, and thanks for your transparency there as well. It's certainly an important need and an important area we've got to address. A few questions on your investments. Somebody asks, how do you balance the challenge of tough tech with expectations of a return?
Ask me in a few years. But, we spend a lot of time trying to find friends. As a venture investor, you provide bridge financing. You have to be, the goal is you want to get as many dollars into the whoppers as early as possible, and the price point is as low as possible. That's how you maximize your multiple of invested capital. But you also need to make sure that these companies have runway. And we used to call kind of the Series C cliff. There's a lot of people that invest in Series A and Series B, but if you're a tough tech company, you need a lot of money for series, B and C and D, and you need time. And it's not like, some of these companies, we're going to raise a large round and it's just going to juice the machine that we already know works. A lot of these, we need a large round to continue that continuum. We with ideation, validation, infrastructure, and scaling, you still have to validate with some of these companies at series B and C. And so the balance is finding other investors that are willing to invest alongside of you and put in, sufficient volume of capital. And you have to have attractive deals for them. But on the flip side, you want a low cost of capital. I mean, you want, high pricing because that gives you less dilution. And so that's a delicate balance. What I will say is we find that the upside is greater than we thought it would be for many companies in 2014. And I think part of it is that supply demand imbalance for ESG. I mean, some of these companies are, the opportunity is actually very large. I mean, there's $1.5 trillion system in the US alone. It's a big sector. It's not very sexy, but some of these companies can be large companies if we make it there. And so we really have to make sure that we get the right amount of runway, we get the right amount of partnership, and we don't, we have to write checks at later stages. We have to continue to be supportive, and we do. We have, we'll write a $30 million check theoretically, but usually we'll write a smaller check, and then we will follow on with additional checks to make sure that we have the right amount of ownership. So that it doesn't have to be a mega billion-dollar deal for us to make a really good return on our investments. We have a large position in the company, but I get your question. You're not seeing the this video game company that did a $50 billion IPO the other day. Like, yeah, that would be nice. But we want to structure these deals so that we can have a healthy return by getting in early, staying involved, and keeping our ownership. And these 9-figure exits are very good exits as well.
Great, Matt. Thank you. I think you're referring to Roblox, which IPO'd last week. Quite a story, Yeah.
Remember them?
Yeah, exactly. A few more questions. Paul asks, I remember a while ago, the hot thing in Midwest ag startups was shrimp farming. Sadly, for people like Paul who love shrimp, me too, Paul, it seems like a lot of those enterprises failed. Do you keep looking to invest in categories that failed so far, or do you prefer to seek out new ideas, all else being equal? Could Midwest shrimp farming still be the future?
With my career and with our investing, we like to say we've made a lot of mistakes, and that's a good thing. And I think that the mistakes that the industry, I mean, if you look at like clean tech 1.0, like a lot of people put a lot of money in, a lot of that didn't turn around, but like a lot of the mistakes that were made there will not be made again, not by investors per se, but by the industry. And we're learning the channel, learning the path to market, learning the economics there, and the technology evolves over time. So I think some of those things that don't work, they're still in process. You still have entrepreneurs going after them. And we like to look at that kind of thing over and over again. It's not rare for us to look at a company or a space for several years before we write our first check. So yeah, we definitely keep looking unless something fundamental has changed. But I think a lot of people, everybody's going for yield. They're minimizing environmental impact. They want surety of supply. They want resilience. All of those things are long lasting and I think global. And so, yeah, you'll continue to see those technologies, and we will invest when the time is right, when we think the time is right, I guess.
Matt, I think we have time for just a few more questions here. So somebody asks that they noticed that S2G has made some investments internationally. Can you tell us a bit more about those investments and also talk a bit about trends you're seeing in this space globally?
Yeah, so I think as far as trends, we were very US centric when we started. But if you think about some of the pillars of our underlying our investments, traceability and transparency, surety of supply, supply chain resilience, food safety, food waste, need for yield enhancement, need for nutritional and product quality enhancement. A lot of that stuff is global. There's nothing unique about the US in its need for those things or its desire for those things. And so, yeah, we're looking globally. We've made investments in Scotland. We made an investment in a controlled environment growing platform, so indoor vertical farming platform there. I mean, that's interesting. If you think about the Scandinavian countries in Northern Europe, you've got a lot of stuff that's going on since like the 80s and before. And so there's a lot of technology transfer that can be made there. We are in a cell-based meat company in Israel, which I love. I think that's, we're going to see that sooner than later as a commercial reality. Let's see, several other businesses. I mean, I think it's a global opportunity. In some jurisdictions, we're less interested in investing today because we don't have local partners. And there are sometimes fears around IP ownership and maintenance. And maybe even maintaining ownership of the company over time. And so some of that is kind of structural and functional. But I think the thesis is certainly global, and we look global. And we also want our companies to build global businesses as well. So there's strategic relationships that we try to build.
Great. Matt, one final question for those who are watching and or listening today and maybe thinking about wanting to transition into a fund, and like yourself may not have the experience of maybe what that fund invests in. What advice would you give to them? How can they better prepare to make that transition?
Patience, flexibility, and patience. This is just-in-time hiring, honestly. Like I think I'm in a great position with this job right now. And no one would really tell me this, but I bet I would be willing to wager that fewer than 10 people were considered for this job. When you go try to get a job at what is it? I don't know, Wachtell or wherever people are, looking at these days. There's a large number of people that those firms will look at for these jobs. I think for the very junior roles in venture, it's certainly as venture continues to expand and these become more actual structured organizations as opposed to a couple of partners. There's a more established path for those junior roles. But I don't underestimate yourself and your background, and don't think of yourself as someone that doesn't have the skills and background. That's one of the things that I think is critical, and was a mistake that I made. And it's probably why I made some of my transitions just thinking I don't have the credentials. It was actually more that I just didn't ask. And I didn't put myself in those positions. And I think if you're a lawyer and you have an approach and understanding, I mean, you got to be commercial. You have to have an understanding of the market and enthusiasm. You're rare. People don't have that degree, and people value that degree. I mean, I have an MBA, and I think that's a valuable networking degree as well. But people that don't have MBAs don't think they need an MBA, and they certainly don't. A lot of them are like, this person's got an MBA. They think they're going to tell me something, but I'm hard knocks. Like that happens. People don't do that with lawyers. They're not like, oh, this person's got a degree. Like they're going to know, like they believe that you know something. And so I would submit to you that you have more, you have something that is potentially more valuable than the other credentials. And those other credentials are gettable. You can't go into a finance role not knowing accounting and finance. I mean, you're going to get a test. People are going to test your ability, but you can learn those things. This is a credential and a way of dissecting problems and understanding systems that I think is unique. So I would just say that. And then obviously flexible. It's just in time. You got to start. You got to stay in networks. You got to meet people. And over time, you'll know more about the system, you'll know more about the players, and you might be in the right place at the right time for one of these jobs.
Matt, we're almost at 1 p.m. Eastern here, so thank you so much. This has been terrific. I want you to know that I'm going to take you up on your offer. So whenever we can get together in person, we would be thrilled to have you at the law school physically and talking to us again. A big thanks to everyone who's attended this afternoon. Just as a reminder, our next conversation will be next Thursday, March 25th, 12 p.m. to 1 p.m. Eastern with Jason Finger. So hope to see you then. Thank you all and have a great afternoon. Thanks again, Matt.
Thanks, everyone. Take care.